The Bank of Canada is set to come out with its interest rate announcement on Wednesday, and there is a lot of speculation by analysts and economists that they are going to move 50 basis points higher. Now, if you don't know the significance of that, that's a 100% increase as to where we're at today. So we'll be discussing what they're seeing in the economy that makes them justify the fact that the Bank of Canada should act now and they should act swiftly. But if this is your first time here, my name's Nick. Welcome to Waste to Wealth. Before we get into the video, huge favor, huge ask. If you learn something new or you get some value out of the video, hit that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button for similar content just like this. It was a jam-packed week for the Canadian economy. We had the unemployment rate come out. We had a federal budget released. And it just seems like everything is coming together all at once, whether it's the commodity sector that's blowing up. And it almost seems like when we look at what the unemployment rate came down to, the economy is running at full steam. Now, it may not seem like that, but the numbers and what the Bank of Canada is looking at is actually saying, hey, we're at a pretty good place right now that we can probably start to raise rates. Now, at what rate they start increasing is a story for Wednesday when they actually come out with that number. But when we talk about speculation and when we talk about where we could go, the economists are definitely on the same page when it comes to raising the interest rate by 50 basis points. But let's start off talking about the unemployment rate. We'll show this chart here. It dropped to 5.3%, and it's definitely been the lowest it's ever been for a long period of time. And when you have so many people that are not looking for work and have jobs, then it's a great thing. It's obviously what all of these governments set out to do is drive down your unemployment rate as best as possible. And I think they added somewhat of 70 plus thousand jobs to the economy. Probably in the service sector, we're talking about restaurants, travel, hotels, as that portion of the economy starts to open up. So when Tiff Macklem and the Bank of Canada are looking at things, they're saying, hey, our economy is healthy because there is a large majority of people that have work. So they've checked that off and they understand that that is a good portion. The economists also talk about the 30-year high inflation, hitting that 4, 5, 6%, also projected to carry through at above target, which is 2% into next year. And the one way to curb that is in raising the interest rate. So they see these two different things, employment, healthy, inflation running out of control. Traditionally, inflation shows a healthy economy. Both of these two factors coming into play, we should move quickly from the Bank of Canada to ensure that we don't let this run out of control. So what are these banks saying? We have a majority of economists, 18 out of 29 in the latest poll, are calling for a 50 basis point. That includes our five biggest banks. And they're also expecting another half point raise at the June meeting. So not only are they expecting 50 basis points in April, they're also expecting another 50 basis points in June. And not to be considered, we're also going higher later, and they're expecting that the rates will be 2% by the end of 2022. So that is a huge increase as to where we're at today. A little bit later, we'll look at the Canadian 5-year bond to give an indication of where mortgage rates could go. But more specifically, we could see here that 62% of the people polled think that we are going 100% or 50 basis points higher in April. Now, we're also going to take a quick look as to what we're seeing out of the Bank of America. And they're expecting also a hike of 350 basis points hike. So we're seeing 50 basis points in April, 50 basis points in June, and 50 basis points in July. So obviously falling into what the Canadian banks are seeing, but obviously it seems to be across the board that we should be making these decisions. Now, if we take a step back and understand where the Bank of Canada is at, they are cautious right now because of the fact that the federal budget is going to include $60 billion of new spending, which will have to be printed and obviously paid back by these interest rate debts. So they're a little cautious on that side and almost thrown out to the wild to kind of fend for themselves. They also have a cautionary tale that if they raise the rates too fast, what is it going to do to the economy? It's going to potentially cripple the economy, and they don't want to move too quick, too fast, and have to deal with the repercussions. So it's almost like a battle of a double-edged sword, but it is crazy right now being at record low interest rates and what it's done to housing and done to everything like that. But we also see, just to cap off the point here on the Bank of America, they are expecting the rate hikes to be 3.25% by March of 2023. So 1 year from now, it's going to be 3.25% on the overnight rate. And this is obviously the rate that they're selling to the banks. And when they sell this number to the banks, they got to add their margin as well. Just for justification right now, just to give you an idea, at 50 basis points on the overnight rate that we're at today, the 5-year Canadian bond has run up to about 2.5%. And what that has meant is that 5-year fixed mortgage rates are at 4% right now. So just to give you an idea of how that's all working in the background, and that this overnight rate that the bank is putting out is not the rate that you'll be paying. So we do see the Bank of America coming out and saying that we'll have to act swiftly and we have to act fast, and it's coming faster than could be expected. So let me know down below what your thoughts are in terms of where we could potentially go on the Bank of Canada announcement on Wednesday. Do you potentially see something coming out with like a quarter basis point to get us up to 0.75? Or are you seeing the 100% increase that a lot of these economists are seeing as well? For me personally, I do think that we have to act quick. I do believe that we have to go a 50 basis point hike. I know in the original meeting earlier on this year, when they were supposed to hike, they did not hike. And that was a big shock, a big surprise to everybody. But it almost seems like we're following suit with the US, with the Federal Reserve down there. And we're kind of hearing the same message coming from that department down there. So it seems like we'll be walking hand in hand with them and kind of following their lead when it comes to these hikes. So I think 50 basis points on Wednesday, conservatively 0.25 basis point would probably be the best. But let me know down below what your thoughts are. Obviously, a big decision and a big factor that will affect us, whether it's loans or mortgages. But yeah, if you're still here with me, do me a huge favor, hit that like button. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button. I hope you all have a great week in the markets. Happy trading.